Well, that was a little unexpected. We have seen Bitcoin absolutely soaring at the moment, completely taking out some areas that I just thought were not going to happen. In today's video, we're going to be jumping down into the technical analysis on the 1 hour, 1 days, and 1 week's timeframes, reviewing the price action and where I think things are heading. Okay, guys, so here we have the hourly chart paired up with USDT. We're using the Binance 1 hour time frame. I've just turned smart money concepts off here just to kind of tidy up the charts a little bit so we can see what's going on from an Elliott wave. And then what we'll do is we'll throw on smart money afterwards and the EMAs, and we'll review kind of what's going on from there. Okay, so yesterday, we were talking about this fifth wave movement here being done, and that's because it looked like a diagonal, and it still is, in my opinion, a diagonal structure. But what we actually saw was this correction. Although I was expecting a little bit further to the downside here, we actually see this as a wave 2 correction now. Okay, and this is the brilliance, I guess, of hindsight, because once these kind of structures appear, you can say exactly what they are. And so you can see here that we've retraced quite nicely, and typically what you tend to find is wave 2s go between 50 and 88.2%. And in this particular case right here, you can see that this comes down actually right into that sweet spot between the 88.2% and the 50% right there. You can see it. Let me just go ahead and remove the fibs. And you can see how price kind of consolidated right into that typical wave 2 area. Why am I talking about a wave 2? Well, what we're talking about here is an extension into that fifth wave movement. Okay, so we have a wave 1, wave 2, wave 3, 4, and 5. That's a part of this wave 3. We have a wave 1, wave 2, wave 3, wave 4, and then this is an extension into that fifth wave. Okay, so again, these things can happen from time to time, and this is the thing with Elliott wave theory that a lot of people don't appreciate, is that it's absolute. Essentially, it always has a structure for every single structure that's ever appeared in a highly liquid market. And the trouble or the problem that we have as analysts is trying to know which structure fits where. Okay, and ability of hindsight here allows you to kind of retrofit backwards what's already happened. So you can back test Elliott wave and it should be 100% correct because there's a structure for every single scenario. And so in the price chart, what do we see? Well, we can see here that we now have an extension in that fifth wave, i.e. we are tracking a wave 1, wave 2, wave 3, wave 4, wave 5, which means we are not yet done with the push to the upside. We've still got more to go. Okay, so the question now becomes, how high is it going to be going, right? And so here we can see this correction to the downside. This actually looks pretty decent to me. It looks like we're kind of done there. So my next expectations are to push the price action of BTC up into this little range just here. Essentially, if I go ahead and make this a little bit bigger, you can see right here, it's between $44,738 and $45,145. Again, you could overextend again in that fifth wave movement, so I want to be a little bit cautious about that. But for the most part, if we are to follow standard practices and the typical structures, then this is where we'll be aiming, basically $44,000 to $45,000. I'll go ahead and remove the fibs so you guys can see it a little bit clearer. So you can see now that we have another fifth wave movement inside that fifth wave, which is, you know, basically just looking to finish off this fifth wave movement, right? Because it's nesting in quite nicely. Now, when we go ahead and throw on smart money concepts, you can see all of these fair value gaps. They are likely to get filled out as we retrace, because I do think we're going to see a very significant retracement here on BTC. I'm not going to call out all of these fair value gaps. There's just so many of them. They are not all going to hold up for the test of time. They are more than likely going to get filled out. Now, what is a fair value gap? A fair value gap is essentially an area in price where liquidity was missing, an area in price where simply liquidity didn't exist. There wasn't enough liquidity or not enough buyers and sellers within that price range. That price has to move to where the sellers or the buyers are. And so when we take a look at these fair value gaps that you see on the price chart here, they basically tell us that there's no liquidity in these areas, or very little liquidity in these areas. And so you see these spikes to the upside. Now, fair value gaps do have a tendency to get filled out, meaning that the price action likes to go back down and fill those gaps, so they are no longer gaps within the historic movements of the asset. Essentially, people like to put liquidity where liquidity was not. It's a psychology thing. It's odd. It happens though. Again, I will stress, it's not a guarantee. They don't always get filled out, but there's a tendency that they do. Okay, so looking at all those fair value gaps, we can experience or should be experiencing price retracement through those gaps, putting liquidity where liquidity was missing prior to the moves to the upside or during those moves to the upside. So on our hourly chart here, it looks very much like we still have more to the upside to go. You can see the stochastic RSI is oversold on this 1 hour time frame as well. If we take it to a 4 hour time frame, you can see it's actually got loads of progression to the downside or to the upside, quite neutral. But across the other time frames, you can see that they are overbought on the monthly, weekly, daily, 8 hour and so forth. So we are running out of momentum. We're only seeing these overextensions as I believe that the market is being forced upwards, liquidating and basically grabbing money out of the asset pair. So essentially liquidity grabbing. And I think a lot of this is quite unusual. So, but let's go back into the charts and review some of the other data points. Bring it back to the hourly. Okay, and let's throw some volumes on because we did see a spike in the volume here on BTC, right? Volume spiked up really, really massively and then dropped down. Again, you see more divergences here. As volume drops down, we have a new high up here on the price chart, right? So we know that the volumes and the price action isn't really aligned very well. So we want to be a little bit cautious with that. But for the most part, we can see that that's actually playing out quite nicely. We had the hidden bullish divergence, as you can see in the wave 2. On this 1 hourly chart. So again, great to kind of see that kind of playing out here on the 1 hour time frame. Nothing at the moment showing up here to kind of give us any kind of areas of concern or anything like that. So we should still be thinking about those pushes to the upside overall. Yeah, and so basically, yeah, I think we are likely to see the hourly chart push up towards $45,000. Let's go ahead and take this into the daily. Okay, so here you can see that we are really pushing up into that expanding diagonal now, really getting that big fifth wave movement. So, in hindsight, actually I'm reflecting on it, I should have been a lot more on this one, on the understanding that our daily chart is expecting an expanding diagonal, meaning that the fifth wave is going to be the largest wave. And therefore, I should have really thought about that in a little bit more detail. And that's on me because I should have been saying in the previous couple of videos that we potentially do overextend and we do push up higher because we're in an expanding diagonal on the daily time frame. So I did drop the ball on that one. And this is the part of Elliott wave theory that is the most difficult, right? The analyst is the one at fault here, not the actual theory itself. So as we kind of take a look here, we can see this expanding diagonal really kind of playing out. I expect a little bit more. 45K is going to be that upper area now. I really are pushing into the upper bounds on this one. I do not see any kind of rationale or reasoning to think that we can push up above and beyond this. But again, we could overextend again. I'm not expecting that though, simply because we are already kind of reaching in. This is a big reach as it is at the moment. Okay. So from our structural points here, not terribly too concerned. Our EMAs, though, are looking pretty good still. 50 EMA, 50 SMA still looking prime, with a 200 EMA right the way down here in the fair value gap between 30 and 32,000. Let's throw throw on smart money concepts there. You can see there's actually a couple more fair value gaps. Actually, that's not a fair value gap. This one here is, though. I'll go ahead and throw that on right there. So we do have this fair value gap right in here that is of interest. So that one's 35 to 37. So we already know that there's a few points of interest in here, areas of interest that price action is likely to kind of go back down towards. Equilibrium is, of course, at 34 to 35,000. So that's going to be interesting to see whether just a retracement into these ranges are going to kind of be what we're looking for. Ultimately, we had anything of interest in here? No, not yet. I mean, I was looking at these candlesticks and there isn't any kind of areas of concern. There's a fair value gap in there and there as well. Some really small ones right here and here, for example, you can kind of see. But for the most part, yeah, not terribly too concerned over the daily time frame. Obviously, we are overbought on the daily stochastics, so we are looking for retracements there. Let's go ahead and bring up our divergences. Obviously, we had our hidden bullish divergence before this fantastic run to the upside, which is now coming out at a staggering 24.85%. And so some great moves have been had there on the kind of divergence. So if you're following the divergence indicator for these kind of trades, that was fantastic to kind of see. From a volume point of view, we've done this many times already, but I'll show it again. You can see here, if we take the volume from the 24th of October, which is the highest peak that we can see on this chart, rallying all the way from August. So if we can see here, we actually have a decrease in volumes whilst the price is increasing. So we do have divergence when we take a look at the volume profiles versus that of the price action. So again, we know that volumes are decreasing, even though we did spike up most recently just here. We can obviously appreciate that volumes were increasing as we've had that latest push to the upside right there. So again, some interesting kind of stuff going on from kind of the point of view of the stochastics and the volumes and the price action, but no divergences on the RSI aspect of things, just the divergences in terms of volume profiles and that of the price action. So on this this daily time frame, yeah, it looks like we're kind of reaching those upper areas now. This is the area of interest that I had marked out, basically 42,976 to 45,456. According to our hourly chart structure, we shouldn't really be that breach, if I can talk today, breach higher than that. So we should be able to kind of keep that within its range. From a weekly standpoint, let me clear that out. We don't need that. From our weekly standpoint here, you can see, again, I'm just going to adjust the trend line because, again, these trend lines are so subjective. We can see here that we are in this ascending wedge. Right inside here, it's getting narrower. It's actually kind of hard to kind of depict this. I think we're getting closer and closer to more like a parallel channel. I'm going to go and see if that is something that we can actually throw on here now to see whether we are transforming outside of the kind of ascending wedge into a parallel channel. But let's go ahead and take a look here. Yeah, I would say we are reaching into the parallel channel. So higher highs, higher lows in the channel, testing the higher range. We'll be looking to test those lower ranges, which will basically be 30K. So if we're to stay within the channel, or potentially even get a big breakout really, we have to be pushing 50K or higher. Essentially, we will be looking at higher than 48,234, which will be that white line that you see there on the chart. That's going to be a true breakout situation for us here. But for now, where it sits, we are in the channel. The channel's tested the higher range. Every time we test the higher range, we do expect further to the downside. We might find something on that median ground area, about 35, 36K. But ultimately, that low side is coinciding with your 200 EMA, your 50 SMA, and so forth. And actually, yeah, that's probably going to be the area that we are going to be looking to retrace down to more over. Obviously, weekly stochastics are overbought for quite a significant period of time. The other thing that's kind of worth noting here is the amount of green weeks that we've had. 1, 2, 3, 4, 5, 6, 7. This is the 8th green week. This is not a sustainable thing. So do watch out, because I do expect price to really kind of plummet quite hard, and we enter into a bit of a red time, red candles on the weekly time frame, and that's going to kind of hurt a lot of retail investors who just think you can only go up, you can't go down. They never appreciate the bearish scenarios. Ultimately, I don't care bullish or bearish. All I care about is whether or not I can make money by betting on the right side, essentially. We are either going to go long or go short on the market. Obviously, the spot buys and the spot portfolio, that can kind of look after itself with a DCA model. But when it comes to kind of leverage trading, then obviously, you don't care if it goes up or goes down. The only thing you care about is whether or not you're on the right side of the trade. So looking at everything on the charts, to me, just tells me that, yeah, we've gone for a very sustained period of time to the upside, much longer than the typical side. So it's definitely on the more extreme of how many weeks consecutively that you can be in green. So we are up in overbought. We have a significant extreme period of time that we've been green. I expect further to the downside. Obviously, we're overbought on the monthly, weekly, daily, 8-hourly charts. Essentially, the macro views are that we too are to move on down. And obviously, if you followed yesterday's video, you know all the target ranges of which I am talking about. Man, I am struggling to talk today, but I think that's going to wrap up today's video. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one, though, guys, have a fantastic day.